Welcome to The Explainer. Today we are digging into a report from Web Cornucopia Finance on a company that's pretty much the engine of India's massive commodities market, the Multi-Commodity Exchange, or MCX.
So let's just start with this one number. What if I told you that you could invest in a company that controls over 85% of its entire market? Well, for MCX, that's not some fantasy scenario. That's just business as usual. It has a staggering grip on India's commodity futures trading.
All right, so here's how we're going to break this all down. First, we'll get the lay of the land, the whole Indian commodity scene. Then we'll zoom right in on MCX itself. After that, we'll pop the hood on its financials, weigh the future growth against the risks, and finally get to the analyst's bottom line.
Okay, first things first. To really get what makes MCX tick, you have to understand the world it lives in. And that world, the Indian commodity market, is absolutely huge, and it's getting bigger every day. And when we say huge, we mean massive. We're talking about a market with turnover that just blew past 130 lakh crores. And the fuel for this fire? It's coming from everywhere. You've got farmers using more sophisticated tools, big industries protecting themselves from price swings, and a whole wave of institutional money pouring in, all running on some seriously advanced tech. So in this gigantic, buzzing marketplace, where does MCX fit in? Well, it's not just a player, it's the player. The best way to think about them isn't as a company selling a product, but more like a digital toll booth sitting on a superhighway. Every time a trade happens, they collect a tiny fee. And here's the genius of that business model. Just look at that giant slice of the pie. A full 75% of their money comes from those little transaction fees. It's a volume game, and it's beautifully simple. The more people trade, the more MCX earns. I mean, just look at this to see how dominant they are. It's not even a close fight. MCX absolutely dwarfs its main competitor, NCDX. Sure, NCDX has its corner of the market in agriculture, but MCX is the undisputed king of the much, much larger energy and metals space. So how do they protect this incredible position? Well, analysts talk about a competitive moat, and in this case, it's a deep one. First, you've got powerful network effects. Traders go where the other traders are. Second, getting the licenses to do this is incredibly difficult, creating a huge regulatory wall. And third, their technology is simply top-notch. It's less of a company and more of a fortress. Okay, so we've established it's a dominant business, which is fantastic. But what about the company's health? Is it actually financially strong? Let's pop the hood and take a look. Right? This is the million-dollar question, isn't it? A great business idea doesn't mean much if the books are a mess. So let's see what the report's analysis found. First up, and this is a big one, 0. That's its debt-to-equity ratio. You heard that right. The company has 0 debt. That's just incredibly rare, and it takes a massive risk factor completely off the table. And it gets even better. Not only do they owe nothing, they're sitting on a mountain of cash, over 2,000 crore rupees. Think about the kind of flexibility that gives you. You can invest, innovate, or just ride out any storm without breaking a sweat. And this is where that toll booth model really pays off. An operating margin over 52%. To put it another way, for every single rupee that comes in the door, more than half of it is pure operating profit. That is an incredibly efficient money-making machine. Now, you might be thinking, okay, great, but was this just a lucky year? Nope. A look at the 5-year numbers shows this is a story of consistent, powerful growth. And the thing I love here is that profits are actually growing faster than revenue. That's the sign of a really well-run company. Of course, it can't all be sunshine and roses, right? No business is without its challenges. So looking forward, you see this clear tug-of-war between some major opportunities for growth and some pretty significant risks on the horizon. So on the bull side, the argument for more growth is pretty compelling. Think about all the new products they could launch or getting even more of that big money institutional investment. But then you have the bear case, the things that could go wrong. And you really can't ignore them. A single unexpected regulatory change could rewrite the rules overnight. All right, so we've seen the good, the bad, and the powerful. We've weighed the pros and the cons. So where does the Web Cornucopia report actually land on all this? What's the final verdict? So, to get to an actual number, the report uses a standard financial tool called a discounted cash flow analysis, or DCF. Now, it sounds complicated, but the idea is actually pretty simple. You try to predict all the cash a company is going to make in the future, and then you figure out what all that future cash is worth in today's money. And what this analysis gives us is a range of possibilities. You've got the base case right in the middle. That's what the analysts think is most likely, giving it a 60% probability. Then you have the super optimistic bull case and the more down in the dumps bear case. The key takeaway for me here is that the most likely scenario suggests the stock has a lot of room to grow. And that all leads to the big reveal. The final verdict from the analyst is a clear buy rating with a specific target price of 7,400 rupees per share. So if you boil the entire report down to one idea, it's this. Buying into MCX is a way to invest in a dominant, financially solid, top-tier company that basically acts as a direct bet on the growth of the entire Indian economy. As India's financial markets get bigger and more sophisticated, MCX wins. Which leaves us with the one crucial question for anyone thinking about this stock. Is that fortress we talked about, that deep competitive moat, truly unbreachable? Or are the risks, from regulators or new competitors, just too high? The answer to that is the whole ballgame. Thanks for watching.